So, ladies and gentlemen, let us start. I invite my fellow panelists to join me here on stage. And thank you very much for your time, and thank you for being here with us. So today, at our roundtable, we are going to discuss a very interesting topic. It sounds very vague, but we'll try to make it more specific. Transborder banking and what should we do with interoperability. I look at your faces and I understand that you don't understand what does it mean. So let's talk about that. I'm happy to present participants of this session. Valery Tomozhnikov, Strategic Development, Bank of Russia, Denis Dadon, Director of Innovation Development Center, Alpha Bank, Artem Kalihov, Enterprise, Andrei Anatoly Konkin, FinTech, and Philip Litvinenko, Head of the Business Development, Moscow Credit Bank. My name is Artyom Tolkachov. I'm from Tokenomics, and I'm the moderator of this session. Bit of background of what we are going to discuss. We had a preliminary meeting and we decided that the word banking is pretty vague and it's a very big topic. So perhaps we want to focus on something narrower. Transactions, what's going on now, what's happening with technologies that is evolving, and what's the paradigm of transborder transactions and will it change in the future? So let me start by asking a question to Philip Litvinenko. I know that you're offering special products for your clients, virtual pooling and KB exchange for prompt operations through your mailbox. So as for transborder payments, do you have any examples? What inspires you? Are there any companies that you're specifically interested in? Good afternoon, ladies and gentlemen, dear colleagues. Well, thank you very much. It's a very interesting question. Transborder transactions in our bank, they play a great role, especially if you look at the current political situation. It has complicated the situation for state-owned companies and banks. So we can actually feel it, and we can see a lot of exporters and importers who are interested in transactions. Seems to me on such global transaction market, there's some kind of stagnation, and the main channel for banks is SWIFT. It has developed a great deal, and CFGPI, it's a new service. It's a global payment innovation service, and the idea behind it is as follows. This service allows the bank and client of the bank, if, for example, the bank reflects some information in host-to-host system, they can track the status of the transaction. If a client is the payer, for example, a Russian company, then using this service, the company, bypassing the bank, can actually track the transaction, meaning they can find out where transaction is, what time was it received, what time it left the bank, so on and so forth. This is a really good service. It accelerates payments and transactions, and banks, part of this SGPI community, they take an obligation. However, this is not an online story, and SWIFT, it's not about money, it's about information. And when corresponding banks are transferring money to other locations using local tools and means and systems. For global transactions and in order to accelerate payments, in Russia there's only one important element left. It's currency control, currency monitoring. Despite recent changes 2 years ago, but the rules are still very stringent and robust, and the requirements for companies also very strict. So I don't think we can talk about significant acceleration of global transactions and payments if a Russian company or a Russian bank is part of this transaction, so probably not. And I think that within a day you can transfer dollars, euros, any other currency, but I wouldn't talk about online. Inspiration, what inspires us. I really like the concept invented by Apple several years ago. As far as I know, but actually at that time I was working in Promsvest Bank, and we've done quite a lot in order to be part of this consortium, but as far as I know, the concept has changed. They used to talk about transactions within Ripple, and it's going to be quasi-money, and it's going to be instant. But I don't have recent information, and I don't think it's the case right now. Companies and banks, they're not that prompt. But what they have in the West, SEPA, for example, Single European Payment Area, where banks and companies located in different countries, for example, European Union, they can make instant payments and transactions between countries. I think we're far from this, and the reason being not only technology, but the regulatory factor. Thank you. Sounds promising and optimistic. Good beginning. To sum up, we can say that, yes, technology is great, but regulation is not going anywhere. And that's the main obstacle for further steps and progress. So, Denis Dodon, you represent Alpha Bank. And we can probably call Alpha Bank a pioneer in terms of innovations on financial market. As for transborder payments and transactions, would be interested to hear what you think about it. And another question right away. Several years ago, you were probably the first organization in Russia who has implemented distributed register technology. And this project was implemented in the Russian Federation. But the question is, what can you say about the results? And another question is whether this can be rolled out to international transactions. Good afternoon, colleagues. Thank you very much for your questions. Well, first of all, innovations and changes, they stimulate other innovations. And seems to me, had Ripple been not doing what it has been doing, we wouldn't have had CGPI. I'm deeply convinced that financial organizations, I don't know, banks and everyone who is on this market, mature players, they don't want to change. Because all is well, they're satisfied, they're stable in Russia and all over the world. An external factor can change things, and this external factor may be a disruptor or a client. Ripple, for example, or CGPI. Banks are behind Ripple and SWIFT, so it's community and another community. So the product is changing and somebody is pushing this change. When a company understands that there's a disruptor somewhere, they start changing. But the approaches are slightly different. Ripple is more about conversion and other things. And this is already a product. SWIFT is like rail track. As for payments and expectations of our clients, I think it's a philosophical question whether innovations would suffice, would there be any changes or not. Clients need to understand status. They make a payment, they want to know whether it has been received or not. Looking at the current state of play, currency control and monitoring, and other things. Let's say nothing changes, legislation is not changing. The main problem would be the transaction. SWIFT is not a payment system. As I said, it's rail tracks. And only rules can help. With CGPI is going to be the disruptor who is going to push the change. As for your question related to blockchain experience and is it connected to GPI and other things, because they're similar, they overlap. I can tell you one thing. We need to understand that there's blockchain, cryptocurrency, and there's another blockchain. I mean, we need to create the environment with rules and other things. It used to work and it exists even now. It's about attitude. For example, take innovations. If you want to change the infrastructural landscape, use new technology without changing the legislation. It's about the attitude of people who are inside the system. What we've tried, we understand that it's in line with Russian legislation, it works, and as a bank, we took this hype blockchain market, we took the approaches. Cryptocurrency, that's one thing. The other thing, when you focus on the approach, how things work, and try to apply it with existing rules. But you're using smart contracts and the technology and the environment that you're creating. So I can tell you one thing, and I can be certain about one thing, that there will be a market where infrastructures will work together. The market is immature. It's not ready to work with external data, meaning those distributed registers. System is just smart system. Bank is an infrastructure where you have information, data. This must be connected somehow. And once you do that, you can get a product. There's a violation of legislation. And can we actually do it or not? Yes, you can. That's the answer. But is the environment ready for this? No. It's not ready even now, but the market is going to change. But once again, the client is going to be the driver, because they're saying that they need a new service, and we see payments differently, and I'm certain, and I don't see why this can be done globally, because when it's about currency control and when, for example, it's about algorithms into ledgers, then it's about the data management model. That's the key question. But if data and information is stored somewhere and it's just a channel, or the environment in line with smart contract, and it's all about status of a product or something else, it's about the technology, which technology is used. But I see that this is going to progress, and apart from technical issues and technological issues, I don't see any other problems. Why can't we do it even now, in line with existing legislation?
Thanks a lot. As far as I understand, the message which was mentioned by Philip was as follows. Compliance with the legislation, with applicable legislation, is the strongest factor which significantly reduces the speed. I'd like to add whatever rails you use, everything which was before is an obstacle. Well, I just give an example. Banks, they implement their solutions predominantly in-house on their infrastructure. When you start to pull up the whole product line, the currency control can register it, can regulate it through API. Initially, there was paper, then digital turnover, and then the whole story related to smart contract is that you take external set of data and do some events inside. It doesn't prevent you to create customer experience and just preempting the thing. Why don't you see the problem there? You make a business application inside the business application. You define the logic of working with currency documents, with smart contracts, and then everything ends up with payments. Of course, you cannot remove 100% humans for the time being from the whole process, but to comply with the legislation from the point of view of providing the processes which are working now predominantly manual and to align your infrastructure and give an opportunity to work with this infrastructure from the outside through business applications, API and ledgers, it's possible. This will significantly increase the speed of money transfer. But this is the question of readiness. We can we can tell to every bank that they are ready or not, but mentally these banks can be ready. But physically, again, the question about the technology, from the point of technology, 98% of market is not ready for that. I would agree with Dennis in many things that the chain from the client to the bank is possible to speed up, and generally speaking, there are no big issues there. But coming back to the fact and to our geopolitical situation and how it works now, many clients face problems with foreign corresponding banks when they receive information about the payment or attempt of payment of any client. Well, serious people work there who work with compliance, and a huge amount of payments. I don't know, maybe there are simple robots which work with transfers initiated by Russian companies or transfers made in favor of Russian companies. And sometimes it even holds the payment strongly. And anyway, it will be finished and more or less positive. And maybe in this case, we can speak about significant speeding up the process. Nevertheless, the situation is as is, and we have to handle it somehow. We should adopt under the current limitations. I would like to agree with Philip, at least what we hear from banks, that the settlement chain goes in parallel to financial messaging. And in practice, it even leads to sanction obstacles. Even in absence of direct recommendations or instructions, anyway, market players pay attention to potential risks. And amid this uncertainty, they reduce the correspondent relations, and it increases even stronger the whole chain. It makes the payment time even longer and even increases the commission, which is then goes on the account of the recipient. Thank you, Dennis. I liked your discussion, and I wanted to ask another question related to our previous topic, especially approaches, the approaches which were studied within different pilot projects from the technological point of view. We recently received news about a new project in cash pooling, which, as far as I know, is implemented using the distributed ledger technology. Could you briefly tell us about it and explain, in general, the value of this technology? Look, if in the project with S7, we use the hot wallet and the cold wallet approach, as we call it. Here, the project is about how to let the bank for the lease. Bank as a service is a very hot topic now, but how it works in practice, I made sure for myself, looking at the project which we are now about to launch, I can tell you the following in a few words. What is this? Coming back to the previous times when we provided the services, the majority of services we used to provide on our own infrastructure, in-house. The same was relevant for cash management. When inside your register, a number of companies open an account, they keep it inside your infrastructure. The business logic, how all these accounts are managed and controlled, is realized for 100% inside your system. When you face a situation when clients make inquiries and they are very individual, clients want some changes, they want to change some settings or something, the whole your configuration happens inside your system. If you take open banking or open API approach and you give an opportunity to put same services outside, you have an opportunity to provide the option of product configuration to the discretion of the client. Infrastructure inside, infrastructure outside. This concept means that you can create 100% or almost 100% customizable product for the client need. What does it mean? It means that I can put up a service, myself as a bank can put up a service and give an opportunity to the bank to use the configuration tool for these services and practically fine-tune a bank for myself. Why smart contract is important here? Many asks about blockchain. Is it possible to do it without blockchain? They keep asking this question, why we need blockchain? I can tell you from myself that there are two options. There's a smart contract, which is important, and the second option, which is also important, is an opportunity to share this decentralized logic. And now I leave the opportunity of stability and storage. I only mean business value from the point of view why it is done in this way. The opportunity to generate a product on top of the infrastructure without getting inside every time, without changing the logic inside. This approach in perspective would lead to cost reduction for infrastructure control, which is very important. And at the same time, the client will have an opportunity to customize the product. So we looked at this product and we had a request from the client. The client claimed some complexities and some disadvantages. Well, we looked at it and now we arrived at the concept which we have. We are moving towards open APIs. Whether payment APIs or DLT APIs built on blockchain, because it gives to the client absolute freedom and the freedom which interface to use in dealing with the bank. The client can give a third-party interface, can embed some products in this interface, which I offer in the way that could be customized, and the bank is customizable too as a result. So that was it. In this regard, I'd like to ask Artyom Kanyukhov. Artyom, you are technological partner of this solution, and Denis mentioned several times the phrase which I wanted to develop about decentralized approach, about the decentralization as is. Could you explain briefly, using cash pooling example, what was the point of decentralization, and in general, the decentralization approach, how do you see it from the point of view of using it in the settlement paradigm, in financial activities in general? Thanks for your question. Before I try to answer on substance, for us, it's very important to understand what do we mean under decentralization, because now this term is used everywhere, sometimes rightfully, sometimes not, and different people understand it differently. Well, and so there is a point of misunderstanding. What are we decentralizing? Why are we doing this? And how should it all work? In the classical in the classical meaning, decentralization means transfer of authority from a centralized body to the local authority, and at the same time, it can be transfer of power. It can be transfer of issue opportunity. If we speak about decentralized cryptocurrencies, it can be decentralization of legislation, of legislative authority. It is obvious that in cash pooling case, it is just impossible because we have regulatory standards based on which we do all banking transactions in banks between client, bank, and there's no legal decentralization. There's no decentralization of money or funds. In 95% of cases, when we mention decentralization or decentralization systems, we mean technological decentralization. What is technological decentralization? First of all, we mean it when we can build a trusted, decentralized environment where we have players based on blockchain can interact by trusting each other, by trusting those mathematical cryptographical algorithms which blockchain technology provides, by building up a trusted environment, a trusted media. In the project with Alpha Bank, and in particular cash pooling, we mean such decentralization, where we have legal centralization and technical decentralization. When, as Denis mentioned, we bring out our business logic from the bank side and put it into this decentralized environment. This decentralized environment allows to all players to trust the logic which works based on this decentralized media, and in this way we allow all participants to interact in a similar way with this environment, or to fine-tune own rules of interaction with this environment in the way that the interaction becomes cheaper, easier in this environment. If we take the issue of decentralization as is, we have to speak about two players, and these two players are not enough for decentralization. We need to enrich and populate this environment with more players, and due to that, we can develop the whole bunch of blockchain technologies when we have not two, but 3 to 5 or more players in this system. They can trust it. They can make mutual settlements, mutual processes based on such environment. If we take a look at trans-border banking, trans-border settlement, here we have the following question. We have a certain environment under our control where players interact based on certain rules. What should be done to connect players from other jurisdictions to this interaction?
Oftentimes, we have a clinch or misunderstanding, meaning what needs to be done And there are several approaches that are currently available to us, and several solutions, but I can probably talk about this later. Thank you very much. One other question, since we've touched upon decentralization and we now understand what it means. In the last few months, people are discussing Libra project on Facebook. So what do you think, Artem? You are probably the one who can understand the details of this. Is it decentralization or not? And could it turn into a mainstream? Well, it's a very relevant topic, which is great. Waves as a company has a schizophrenia to a certain extent. When one part of company has a public platform, cryptocurrency, and it's all very successful, and it's following cryptocurrency and mainstream, and it says yes to Libra. At the same time, there's another area, corporate area, that I represent, and the ideology is a little different. This corporate area, this corporate chunk of work, is about technology for blockchain, and it's separated from cryptocurrency, what Dennis was talking about. So this is business, and as for Libra, well, Libra is an attempt to decentralize the system. There's a consortium that is producing stable coin, and I'm not sure, and it's not clear to me what's going to happen to it, but they're using multi-million, multi-billion database of Facebook. They are making transactions. Well, it's great for cryptocurrency. However, I think there's a lot to talk about, and there are a lot of issues related to regulation. I'm suspecting that probably this will not be successful in the next year or two. So maybe in the next 3 years, cryptocurrency for trans-border transaction will not become mainstream. Not likely. Thank you. Thank you, Artem. No microphone. What do we mean by cryptocurrency? I think it's a subject for a separate discussion. Because as a lawyer by training, I've been looking into this for a long time now, and I can tell you that regulators themselves can't actually tell what is considered to be cryptocurrency or not, Bitcoin or other payment tokens. Is it cryptocurrency or not? We can discuss this if we have time. Because at the moment we have a unique opportunity to hear what regulators think about this. Vladimir, as the Director of Strategic Development of Financial Market, you probably have a position of your own, and you have an opinion on that, on all of what we've just discussed, and Libra, and application, Bank of Russia, and you. We would really be happy to hear what you have to say. Yes, thank you very much. Actually, it was quite interesting, and the question about Libra is interesting. I'm not a lawyer, but I've read something this morning. So to be really brief in response to your question, we need to understand first what does Libra means. Have you read Libra white paper? By show of hands, who read this? Okay, you're well prepared. Okay, great. I don't understand what does cryptocurrency means, and the thing is, it's an element, and it's considered to be a stable coin. It's some kind of a system, and it's linked to some kind of support. Risk-free assets and investments in main world currencies. I don't have the information about that. But all of these are just general things. I'm a regulator, but I support your legal approach. We do need to understand what it means and what are the commitments, what holders need to do. Our job is quite difficult. Everyone thinks that regulation slows down development, and it's an obstacle and it's a problem for criminals. But not everyone remembers that there's no market without rules. That's why the market functions. But with rules, it's a little complicated. Not everything is clear. Be it Libra or Facebook, what it's going to be? Is it a claim? Is it about commitments or pool of assets? Or is it something else? I don't think they have a common position. If you read the white paper, they talk about these currencies and what's going to happen, what about the turnover, nothing about that. We don't know these things. As soon as we do, we should be able to understand what needs to be done. The goals are still the same. We're trying to protect the rights of our consumers, and we need to understand what financial products consumers need. And micro-potential theme is another interesting topic. So it may lead to disbalance. But Libra, it's tricky. But I know that the Stability Board, they have discussed it, and they've discussed it in Switzerland. And there's a potential, and there are potential risks related to currency. And a mixture of currencies may have a significant impact on currency exchange rate. There might be some effect. But as for decentralization, if such coin may appear at a certain point in time, actually, we do have really good specialists, and we could have organized this business differently, but this piece of advice is not for free. But sometimes you can voice the idea, and everyone is all of a sudden scared, trying to look for options and solutions. Then they respond, and actually, then it gets back to you. We are not prepared for this. We're not prepared to be part of this. But white paper is saying that, first of all, they want to comply with regulatory requirements in those countries where they are represented. And we're happy to hear that. Thank you. Well, if Facebook representatives are here or they're watching the session online, they would hear that. But unfortunately, this advice is not free. Okay, anyway, thank you very much. Cryptocurrency, when people talk about that, I think this topic became so relevant because regulators are actually trying to prevent illegal transactions and complicate lives of those who have no criminal intentions. So cryptocurrency, when it appeared, people started talking about owners of assets and ownership rights. I think that Facebook has decided to take this paradigm and add several elements, saying that, yes, we have assets, we have something else, and thus we're giving people the opportunity to do transactions, to make transactions. Well, maybe it makes sense to look at it from a different angle. I read in a McKinsey book, you need to first ask yourself a question, why, and then how. But sometimes it's vice versa. With Libra, it's the same story. If we want to simplify something, for example, in anti-laundry or terrorism funding and other transborder stories, you can identify inefficiencies or deficiencies, eliminate them, and maybe you can offer something else to address the same problem. We can talk a lot about trust and other things. You probably have a neighbor who's trying to borrow some money and then he doesn't pay you back. But now we have a new concept. Now we have trust. I give you my word that I will give you money back. Okay, but what if something goes wrong? Who's to blame? Who's going to owe whom? There are some redundant elements, and I think probably with your help, in 3 days we'd be able to draw this big system. I've never done this before, but this is a very complex system. Everything is well structured, but for a very specific case. Who is going to bear losses? No one wants to do that. That's why the client waits for 2 days till the money arrives. For example, you use SWIFT, you transfer money, and someone needs to take the risk. What if the money doesn't arrive? If we find a solution, then it's going to be an improvement. Otherwise, it's going to be another attempt to reinvent the wheel. So I think we may be faced with a situation that we already know. There are a lot of elements, and we need to take them and try and build something. Actually, quite recently, there was a British conference, and one specialist said that we have a system where only $1 is used efficiently, but I don't know which one. Now, Russian participants said that there's a different problem. We know which ruble or dollar is efficient, but how can we get hold of it? It's impossible because the infrastructure and the system are already there. So maybe we need to save some room for the improvement, and part would go to consumer and part would go to business. As a regulator, we're totally for it. Thank you. Just a few things to add. I agree with you. First, you need to ask yourself why and then how. But I would like to add that we need to differentiate between who is going to answer this question why. If it's us, that's one thing. But the community or the society has a different vision. If you retire from the risk that exists in cryptocurrency area, but I don't think that Libra is a pure cryptocurrency, because stable coin, that's something different and has to do with assets. But here, it's some kind of USDT. But I can tell you one thing.
Even if we take our example with colleagues from S7, we are now organizing ticket sales. And what do we face now? Working with fiat money 100%, we face the following. The speeds which are existent at the infrastructure level to provide money transfer are not enough. Yes, it's about seconds and money passing by seconds, but at the level of infrastructure, this speed is not enough. What Libra or any coin can give us, JP Morgan coin or internal coin, it gives an opportunity to create a system which will be 100% linked to fiat. It will be able to create a system which will be above the infrastructure level. It will allow us to leave the banking Dane story. This is a hard to control thing. If you face it, you may seem that the day is open, day is closed. Everything seems to be fine. But if you sit in different time zones and the transaction goes between time zones, you can come to N7, they can confirm it to you. Well, this is a difficult story. You should constantly do these transactions, and in this case, a stable coin above the infrastructure would allow you to make transactions 24/7 in the speeds you need. This would be really relevant. None of the systems, payment systems today can provide such speeds, especially it is done between infrastructure. If we speak about the external environment, it is already quite archaic. 3 to 4 financial institutions in need for a proper speed cannot provide and cannot answer the requirements of the client. This is a problem. If we can take Libra could be a way out because the market requires speed, requires quality, and these are the expectations of the client. Resistance is a normal reaction of the world facing a challenge. This resistance should go through regulation. Transparency can be provided in absolutely any system. We can show who is owning Libra, who is the owner, whether it's Libra or not. Everywhere you can provide it everywhere. But the challenge is always like this. If you have a business, if you have a business model, if you get a disruptor, of course you're going to be resistant. You will try to invent some mechanisms to delay this thing and to have time for adaptation. There are two stop factors apart from compliance which pull the brake on the system. First is regulatory or the community which is behind all that, saying that we don't want to lose the money or lose the incomes which we used to have. Second story is the infrastructure part. It is not ready for these speeds because if you have to adopt, you need to invest X amount of money in your system to make the system able to deal with these volumes. If you're not ready, you face the disruptors which will push you to these changes. The situation is normal here. Just the economic organism, economic body is resistant to the new situation. If it's absolutely legal, we still will face it. Thanks. Now, I wanted to the consortium story because it's also one of the potential solutions which is now on the agenda at the global market. And you for sure heard about JP Morgan eCoin when they tried to make their consortium interbank information exchange. And there is a wonderful consortium of FinTech Association. And the representative of this FinTech Association is with us today. I wanted to discuss with Anatoly the issue how MasterChain, one of the main products of FinTech Association, sees itself in the payment market, maybe transborder market, and How do you see the interaction or competition with those consortiums I mentioned, R3 or JP Morgan? And what do you think in general about the whole decentralization idea in payments domain? Because Master Chain is about decentralization, still yet limited, but decentralization. I would continue the discussion about what is the purpose and what are the problems we face in the transborder business. And maybe we can decompose it somehow. Then first is the corresponding chain, which is used for payments as a result, then liquidity issue, which requires to support these correspondent relations. The third thing is speed of payment and dependence of technological infrastructure providers, in particular SWIFT. Proceeding from these requirements and needs, and considering those consortiums and solutions you mentioned, for example, JP Morgan Chase and their quorum with the network of around 600 banks, which in different ways don't have the complications which you mentioned. They already have correspondent relations, and their payments, taking into account these correspondence relations, are going quite fast. They don't have no sanction risks. As to the countries which are subject to these risks, such Russia, basically the quorum or JP Morgan chain solution with JP Morgan provided dependence is not quite suitable. Master Chain, as the platform was designed initially in a way that the cryptographic algorithm level can be suitable for different jurisdictions, different countries, but in practice, when we faced it during studying this topic, the issues are more of the regulation and not of technology. Because in the case of interbanking, there is a question how to bring money to fiat domain and how to handle issues of exchange rate differences, which are relevant in soft currency countries. And blockchain technology, again, has some economic effects within the framework of currency exchange, and we won't be able to get an answer. As for E3 and E-code, it is obviously one of the international solutions which has certain potential with the approach of consortia-based management and properly build up decision-making process. But I'm not going to call any names, but some risks came true related with Corda and R3, and how Corda and R3 can solve this issue of risks. That's the question. Master Chain, on one hand, as a technology solution, could be suitable, but on the other hand, this is more about regulation and control model and less, and I see less technology issues and less technological properties of platforms. I wanted to discuss a question related to SWIFT GPI. What do you think? What do you think about the innovations in the area of decentralization and whether this experience is needed for SWIFT GPI solutions, which allow to use the major part of the opportunities which are normally presented by distributed solutions of blockchain? And what is your stance on this issue? I think it would not be good in providing any solutions. SWIFT and GPI made a certain step in infrastructure development, and the identifier would allow to the participants to see online status of payment. Commissions become transparent for participants, and the speed is provided not by technological or infrastructural methods, but by methods of imposing additional requirements to participants who, by connecting to GPI, can speed up the settlement process and the payment process. Coming back to transborder settlement issues of different countries, SWIFT as a tool of financial messaging and not financial settlements would not be able to solve the issue of switching of liquidity, correspondent relations, and building up the whole chain here. And in the very end, for countries suffering under sanction risks, depending on technological provider from the external side. Thank you very much, dear colleagues. Since our guests are looking at their watches and whether they should go next to Kupolo Toparos restaurant, I think we should wrap it up and just quickly answer the question: how do you see the future of transborder payments? Just briefly answer 10-15 seconds, and then we will finish this panel. Denis, are you ready to start with this blitz answering? From my personal view, I must tell you that the payments will be more integrated in the client process, and we can see it in trade finance already, because this is one of the most complicated areas, and I can tell you that payments will move towards integrated process, client process in an integrated way through platforms, through applications, and there are a lot of pilots. There is a number of projects showing us that we, as banks, should include the payment gateway and use it for transferring money. I think soon, in the recent years, the current conservative infrastructure of transborder payments will be getting more outdated, and I think the future belongs to decentralized models of these payments. There are already prototypes of these payments. There is Ripple, which is quite successfully used in certain jurisdictions. I think this topic will be developing, and gradually the whole world will move to this settlement paradigm. Maybe, well, I started too pessimistic. I want to be more optimistic. In the end, I truly believe that there will be times when we will have transborder international any kind of settlements in one currency in online. I think the world will come to it. Thank you. I will take 2 points. First, in part of client experience, for sure we will have the trend to make it very fast for the client and very cheap. And fundamentally, this is. And then further on, it depends on the agreements between the bank, but that's not the problem of the client, because in general, the whole world is developing towards better client experience, and the business will invent something here. There are a lot of talents, a lot of ideas. It shouldn't be decentralized, but I'm sure that we as clients will do it cheaper and fast. And as for the technical part, I wouldn't set any stakes here, whether it's going to be decentralized or centralized. I don't have the border here. This is only about the parameter. Maybe it's going to be quantum or something, but the question is, for sure, we can be almost sure that the system of current correspondent relations will vanish, this bulky system will disappear, and different requirements of anti-laundering or something, anti-terror will stay, but these social functions will stay. It's 100 years ago, it's after banks, but someone else will also be responsible for that, but banks are internal here.
I do believe in decentralization. I don't think that, but that's my opinion. I don't think that Libra or anything else would be able to create some kind of revolution, because it was Bitcoin. In ICO, it was Ethereum. What's going to happen to Libra? I'm not sure. It's not clear. But as for decentralization and infrastructure, yes, the problem is there. And I don't think that in the long run, with the help of participants and majors of the market and regulators, this decentralized infrastructure is going to develop. And based on this infrastructure, there would be some solutions that would help without middlemen to make payments online. Okay, thank you very much. Two things. Waves has schizophrenia, and everything is complicated. So, two conclusions. So, once again, round of applause to our panelists. Have a good evening and see you soon.